Hey everybody, welcome back to the VIP Financial Ed YouTube channel. We talk all things banking and borrowing. Today we're going to talk about getting a mortgage during COVID-19 here in 2020 as we wrap up the year. I am also at the tail end of refinancing a property. This is actually our primary residence. We're taking a 3.625% interest rate, which is already mind-blowing that we got that in the first place, and we're reducing it down to a 2.875% rate. That will effectively reduce my payment on the property by roughly $250 each month. The break-even point on this was a no-brainer. Even though we intend on paying this property off in somewhere between 3 to 5 years, it made sense for us to go through the painstaking effort of getting this mortgage. And that's what we're here to talk about today, is keeping your ducks in a row, because it is harder than I can ever remember it being to get a loan. This has been an absolute nuisance. But if you can be organized and you can file away the proper information ahead of time, you can supply them what they're conditionally asking for in a very punctual way to where you can keep the process moving forward and get to the closing table before your lock expires. And that's really what we've been working towards all this time. Now, first recommendation as we start off this video is to shop for the best product. You can move from one lender to another. In fact, I started this process with a different company, which I'm not going to name on this video, but I was terribly disappointed with that company. And I made the mistake early on of agreeing to a non-refundable $500 application fee. I would absolutely steer clear of any lender that's requiring you to supply an application fee to get the process done. I was convinced that we would get to the closing table. It would be applied towards closing costs if in fact we did close. I chose to walk away from that deal because I was becoming so frustrated that they would not lock the loan. Most lenders are willing to lock the loan on the front end after they take your 1003, which is the loan application, and then they begin to ask for conditions to be supplied. The other company, not only did they charge the lender fee or the application fee, but they also were unwilling to lock the loan until I had basically given them everything but my firstborn. And I finally said, I'm shopping it. I found a better rate through better.com. So far, it's been a fairly smooth process, all things considered. I'm certainly shocked at how much they're asking for compared to loans that I've done previously. However, I understand that that's just the climate that we're in right now. So certainly consider better.com. This is not sponsored. They don't know I'm sending referrals over, but it might be at least one to shop against if you are looking. Check 2 or 3 lenders. Do not be afraid to move from one to another if you're not getting the product you want. And also try to avoid having to spend money on things like appraisals if it's unnecessary. There are a lot of lenders that are allowing desk reviews because the market is so hot in so many areas, and that was the case on our property. It did not require a physical appraisal, so that saved us $550 or more in unnecessary costs. You can see that we have our closing finally scheduled here on November 24th. We've made it just in time to avoid our rate lock from expiring. The back office that they supply here through Better has been fairly useful. You can see it kind of gives us a status. We do have our title report all wrapped up. Can kind of give a summary of where we're at, general summary of the loan information, property value, and so forth. Over here on the left menu, we have our tasks, and this is what I wanted to really showcase during our video today. The tasks have been over the top, okay? It's on a daily basis, and because I'm so organized, literally within an hour in almost every case, I'm able to supply what they're asking for, barring me being in a meeting or something of the sort, but following, I'm able to get to this really quickly. As you can see, it says, nice work, you've completed all your tasks. Some of this was even requested today, and a lot of it is because of COVID. In fact, my most recent condition here under income and employment says, we've finished our initial review of your application, but in light of COVID-19, we want to make sure that we have the most up-to-date information. In particular, we need to make sure that VIP Enterprises is still operating and earning the same income as before. To do that, please upload documents that show current business activity in the last 10 business days, signed invoices, contracts, business receipts, etc. This has never been requested from me before. And keep in mind, folks, I have a low single-digit debt-to-income ratio. Based on adjusted gross incomes, debt-to-income ratios are of no concern, and yet here we are, they are still concerned. Keep in mind that many loans will allow you mid 30% debt-to-income. Debt-to-income meaning how much of the income that you're taking home is allowed to service the debts that you are currently showcasing on your credit reports, as well as any debts that aren't on the credit reports. A lot of lenders are going to ask you to supply any addendums or affirmations about not having any other debts that you're obligated to make minimum payments on. even if they're not showing up on your credit report. So you've got to be very specific, very detail oriented. Create a folder on your desktop and make it, fill it with all of the different conditions that you expect a bank is going to request. Obviously, that'll need to be updated. Things like bank statements, usually they're going to require the last 60 days. So you can obviously gather those things fairly quickly if your online banking is up to date. Let's take a look at a lot of the finished tasks here, just so you can see how over the top this process has been for me. Check this out. Obviously, there are some specific legal requirements that are standard with every loan. This is not unusual at all. Then we generate the Form 1003. This is the loan application. There's details that are supplied about potential closing dates. Anytime I select on a drop down here, it gives me specifics about this. It's giving me some other standard information that is not uncommon. This is review and acknowledge initial closing disclosures, review and acknowledge closing best practices. This is my current lender. They want to see my mortgage payments, copy of the signed 1003. That's obviously standard. You got to sign that loan application. It's asking my loan originator to e-sign on their side. Review and e-sign the rate lock agreement, review and acknowledge the loan pricing agreement, review and e-sign initial application, review events that could impact the loan application, review and e-sign our third-party authorization agreement. Now, all of this took me probably about 15 minutes. Then we start to get into some of the other conditions after the application has been completed. Upload insurance policy, review and e-sign the property inspection waiver, confirm latest tax return, address, marital status, occupancy intent, add your move-in date. Occupancy intent, folks, is where they want to know what the intention of this property is. Does Matthew Pillmore intend to occupy the property as the primary residence? Yes. Has Matthew Pillmore owned any other real estate in the past 3 years? Yes. What type of property? Investment. How did you hold title? By myself. Do you intend to occupy the property? Folks, I can't even tell you how many times people have come to me and asked for my advice. Do I say I'm living in the property even if I'm using it as an investment property? No. Do not commit mortgage fraud. It is not worth it, folks. If you cannot obey the rules in order to get your goals accomplished when it comes to maximizing your cash flow, creating wealth, then you're not heading down the right path. I fully believe that you can get the edge, and you could do so by playing the game ethically. Make sure that you are answering these questions truthfully. They came back and said, listen, it looks like you're earning income from this property. And we are. This property, as I said, doubles as a short-term rental. Over the course of the 12 months that we've rented it this year, even with the COVID shutdown, I think we'll still end up pulling away about $55,000, and we're able to use the property for roughly 7.5 months ourselves personally. So it's been a really great balance. If we are away, if we are traveling for work, if we're in the RV, we're able to actually make considerable amounts of money. In fact, over just the holidays, I've gotten my largest booking coming through on this property, where for the week of December 27th through January 3rd, we'll end up netting roughly $5,000, just under $4,900 and change. Pretty phenomenal, if you ask me. So we're definitely making the most of our cash flow opportunities, and we're always thinking out of the box by way of modern streams of income. Let's continue to go up the list here. Add your move-in date. That seems obviously irrelevant. We're already living there. Confirm mailing address, confirm dependents, confirm my full legal name. All very easy conditions, don't necessarily require a lot of organization on the front end to be prepared for those. Please provide disclosures from the purchase of the property. This is one of my rental properties. Task progress history. Please provide closing disclosures from the purchase of the refi. Ridiculous. Please provide mortgage history for prior mortgage with Vector Bank. This is a closed home equity line of credit. I just had to simply demonstrate that loan was closed, even though it shows up on the credit report as closed and paid. Upload mortgage statements for Arvest, upload mortgage statements for Loan Care, recent statement for credit line, explanation of inquiries, upload lease agreement, explain new inquiries on the report, explain addresses on the credit report, upload mortgage statement from Arvest, upload mortgage statement from Loan Care. If you notice here, even some of these are replicated. And it becomes so frustrating when you've already provided some of these, whereby it's being requested again. So one thing I've seen as far as consistency is concerned is that there is a disorganization among lenders. Be prepared for that. Explanation of business addresses on the credit report. Upload Chase statements from 10/7 to 11/6. Add your 2 most recent bank statements. You can see that we've had to supply many of them. Okay, and they even said not needed on some of these, but we were very, very thorough about it. Add any rental income, business owned, business owned, business owned, business owned. Upload your 2 most recent personal tax returns. Explain why current primary residence is showing on 2019 personal tax returns as a short-term rental, because it is. Please provide 2019 and 18 self-employed W-2. Please explain why profit and loss provided for 2 different businesses when tax return only shows borrower has 1 business under VIP Enterprises. We have multiple. Download and complete the Business 4506T form. Download and complete the Personal 4506T form. Upload the most recent financial documents from VIP. Add details about COVID-19 impact. Guys, this is fresh here. It looks like you've received most of your income from VIP Enterprises. In light of COVID-19, we just need to check in and make sure that the business is still healthy and your revenue has not been affected. This lets us know that you'll still be earning and can afford your loan after it funds. Business owned by Matthew. Upload K1. Add details about COVID-19's impact. Again, it looks like you received most of your income. Is this a replicate, folks? Yes. However, you just have to be willing to be diligent, to be quick. The key here with these mortgage applications and the conditions that follow is punctuality. You've got to have your ducks in a row to make sure that you're getting to this stuff rapidly. Add details about COVID-19's impact on VIP Enterprises LLC. Again, same exact thing where they're wanting more and more information. They want to make sure that my answers are uniform and that they're not catching any slip-ups. They want to know that I'm being truthful about what I'm saying. Business owned by Matthew. Add details about COVID-19's impact on visionary investment planning. All my businesses, they're double checking that I can actually still afford the loan that I'm borrowing. This is why forbearances can end up biting you in the rear end. Do not use a forbearance unless you absolutely need to. And if you're under a forbearance agreement right now with a lender, it is my recommendation that if you can afford it and it's unnecessary, that you get caught up and current as quickly as you possibly can and remove yourself from that forbearance, because it will prevent you from getting mortgages moving forward. Add details about COVID-19's impact on VIP Inc. Again, they're asking the same questions frequently. Business owned by Matthew. Upload your business tax returns. Add details about COVID-19 on VIP Inc. LLC. Business owned by Matthew. I just have to keep being diligent and consistent in going through this stuff, even as frustrating as it is. Government monitoring information for Matthew. Declarations, business or commercial purpose. Confirm the use of proceeds from the refinance. Property questionnaire. Add a co-borrower? No. Authorize hard credit pull? Yes. Confirm your intent to proceed? Yes. Let's look at that one. We can't keep your application moving forward until we have your permission. This is a standard step for all lenders, and it is mandated by the government. Weird. I don't remember ever doing that one before. Review updated informational disclosures, credit score disclosure exception, confirm use of proceeds, initial information disclosed, review the loan estimate. Folks, it has been a tiring process getting a mortgage, getting any other unsecured type of lending instrument. Tools we call debt weapons here on this channel is as frustrating as it's ever been. I personally hate working with lenders and banks. What about you? Leave it in the comments. Let me know. Drop a like on this video if you too hate working with banks and lenders. And yet, it's a necessary evil. These tools can help support our ability to accomplish our short and long-term objectives when it comes to wealth creation. A lot of times these tools are necessary if we want to be able to optimize our net cash flow position. This extra $250 per month is not a lot, but is it well worth the effort I'm putting into this? Absolutely. How many hours in total have I spent on this outside of the, brain damage that sort of is a residual? Maybe just a few, right? Maybe 3 in total. Is that worth $250 a month over the next few years while I pay off this mortgage in full? Yes. Now, if you want to see how you can pay off your mortgage in full in 3, 4, 5, 6, 7, 8 years instead of 10, 15, 20, or 30, make sure you check out the videos in the description below. It's awfully exciting and it can save you hundreds of thousands of dollars. In fact, let's take a quick look here. If we were to scroll down to our recent closing disclosures, let's take a look at this loan estimate. I want to just break down for you how much this loan is going to cost me at a 2.875% historically low interest rate. Could I have gotten 2.625? Maybe. Okay, so maybe I'm 0.25% off of the best rates in history. And yet, take a look at this. A loan amount of $471,000 to start at a 2.875% rate with a $1,955 per month principal and interest payment. We've got a $517 per month escrow. And you can see here that our total costs of interest on this is, in 5 years, $119,450. And let's see, total you will have paid in principal, interest, mortgage, insurance, and loan costs. Principal you will have paid off. So I'll have paid $119,000 in interest, and I'll paid off $53,000 in principal in 5 years. Pretty pathetic, even at a 2.875% rate. Look at this, however, and I'm looking for the gross figures here because that's really the most significant, and usually it will reveal that. See if we can find that here. This is sort of the truth in lending portion of the disclosures where it breaks down for you just how nauseating long-term costs of interest are. Total interest percentage, TIP, folks, and I'm trying to figure out, because this should give me the full 30 years, however, it's not. It's saying that the total interest percentage is 49.481%. So if I were to take the math of $471,000 and I calculate basically 50% of that, it's going to end up being almost $250,000 worth of future interest costs on this property. Basically, I could buy another half of this house with the cost of future interest if I were to extend this out over the course of a 30-year term. This is why I pay these balances off in under 5 years. If I pay these balances off in under 5 years, I can shave that $250,000 worth of future interest costs down to a very small fraction, in most cases closer to about 25% of the total interest I would have paid otherwise. So if I can save 75% of $250,000, I am all for that, folks. And perhaps you are too. Maybe you'd rather pay $65,000 instead of $250,000. If so, make sure you check out our other videos. Make sure you sign up for our coaching if you haven't done so already. If you want help being able to accomplish these types of results, would you pay somebody thousands of dollars to help you save hundreds of thousands of dollars? Seems like an easy trade, right? At least subscribe. It's completely free. Check out all of our videos. They're free too. And drop a like if you hate those banks. Leave a comment below. What experiences have you had trying to get loans recently? I'm very curious. Has it been harder for you? Have you found it to be more streamlined? COVID has seemingly disrupted this process for everybody as well, at least for me. And I'd love to hear about your recent experiences too. Stay healthy, have a great holiday. Until we see you on the next video, make it a great day today and keep on cash flowing. Take care, friend.